This is the BioCentury Show.
Brought to you by the 26th BioEquity Europe, scheduled for May 2025 in Prague. Join BioCentury, EBD Group, and regional hosts IOCB Tech and Prague Bio at Biotech's premier CEO and investor conference, and debate what comes next for European biotech.
Welcome to the BioCentury Show. I'm Stephen Hansen, Director of Biopharma Intelligence at BioCentury. And today, I'm excited to be joined by Sander Slootweg, co-founder and managing partner of life sciences VC firm Forbion. Sander helped to co-found Forbion in 2006 as a spinout of ABN AMRO's Life Sciences Fund, which he had also co-founded in 2000. Since its establishment 20 years ago, Forbion has about 5 billion euros in assets under management raised across 10 active funds, including most recently in 2024, when the firm raised 1.2 billion euros for its third Forbion Growth Fund and 890 million euros for its seventh flagship Forbion Ventures Fund. It is also one of the best performing life science VCs, with a net IRR of more than 25% over the firm's 20-year history. Sander holds degrees in business and financial economics from the Free University of Amsterdam and business administration from Nyenrode University. Sander, it's my absolute pleasure to welcome you to the show.
Thanks, Stephen.
Yeah. So, Forbion has been on what I would call sort of a meteoric rise, it would seem, of late. But like many of the biotechs that you invest in, it feels like somewhat of an overnight success that took 20 years to build. Just 10 years ago, you were raising your third independent fund, which closed at 183 million euros. And then just 6 years later, you're raising over 1.3 billion euros across your venture and growth funds and 2 billion euros 2 years after that. Can we sort of start with, what the drivers were for this sort of incredible period of growth for the firm?
Yeah, well, it seems like a long time ago if you recite our 183 million fund of 10 years ago, indeed.
That's right.
So I think what we've been trying to do at Forbion is sort of right-size our funds to the opportunity set. And in that sense, I think we've seen growth and a maturation of the ecosystem in Europe. Historically, we've been very focused on Europe. And so we've been able to, especially by setting up our dedicated growth fund, to seize an opportunity that I think we were one of the first to see, that indeed there were quite a number of quite mature companies emerging in our deal flow in Europe that, in our view, required a different approach, larger rounds, perhaps prepping for a Nasdaq IPO, teams thinking about late-stage regulatory interactions, thinking about market entry strategies, so different skills from the original sort of early VC strategy that nowadays is called Forbion Ventures. So I think, in essence, that's what we've been trying to do by setting up the growth fund, but also by increasing the size of our funds, is to match the opportunity set. And from a purely sort of European player, I think now we pride ourselves on being a more global player. And we also opened the office in Boston. I think if you look at our new investments, also quite substantial number of investments is made in the US. And also we are quite active in sourcing attractive assets from Asia and incorporating these in Western NewCos. So I think you could say by now we've sort of matured to a truly global firm.
Right. I mean, so you had that sort of historic, sort of Eurocentric sort of focus, but as you say, you're sort of global now. Can you just kind of remind everyone kind of what the split maybe is currently, kind of what the current strategy is, how you kind of break out that focus sort of geographically?
Yes, for ventures, I would say it's about 60 to 65% Europe and 35 to around 40% US and Canada, I should say. And for growth, it's almost getting to 50-50. So it's an even split. And it does reflect the deal flow statistics. So we sort of proportion our investments to the deal flow that we see from the regions.
Okay. And on an AUM basis, I mean, you're the largest life sciences VC in Europe. Is that correct?
Yes, I think if you consider the sort of the independent firms, then yes, with our 5 billion AUM and the fund sizes that you recited, I think we are the largest in Europe. But of course, there's also Novo with its Novo Holdings, sort of more corporate venture arm that is also a big player and a quite active player.
Right, right. And, obviously, Forbion's, been outstanding growth, but you guys aren't alone. We've witnessed, pretty tremendous growth kind of across the European life sciences VC landscape, over the past 5 years or so. And part of, I think, something that's jumped out is, what we've seen in terms of the compression of the investment timelines for funds, going from where we used to typically see anywhere from 3 to 5 years between, new funds to where, that cadence is really now more like every 2 years, it seems. Can we just talk a bit about how much is that a reflection of an increase in sort of the investable opportunities that there are in Europe, or is that an expansion? Is that global expansion elsewhere sort of the driver of that? Can we just talk about sort of what the dynamic is there?
Yes, and I think it's a reflection of the quantity and the quality of the deal flow. And so if you consider our deal flow nowadays across the platform, we see about 2,000 deals. And last year, according to one pitch deck that I saw from a life sciences focused investment bank, we were the most active lead investor globally even. And having made around 20 investments, which is about 1%, therefore, of the 2,000 deals that we see. So I think we can still be very selective and then still be the most active lead investor, which is, I think, to say that the opportunity set is tremendous. And we have right-sized the team to be able to deploy the funds at this pace, which we consider a healthy pace, because what our investors like is, of course, for their money that they commit to our funds to go into the ground so that it can start to generate returns. And if we can do this in 2 years, and they know that we're on this 2-year cadence, then they can sort of do their own capital budgeting and be ready to allocate to our funds every 2 years.
Yeah. So, just, I guess, sort of going a bit deeper maybe on that European investment opportunity. Is this being driven because we're seeing more innovation coming out of academia? Is it more we're seeing just greater opportunities because farmers are, readjusting their pipelines, and so more is kind of being hived off there? Can you maybe pinpoint a source of where we're seeing that sort of increase in the opportunity?
I think it would be across the board, but the other thing to consider is that we're also doing company building in our venture strategy. It's about 1/3 of company building, and so that means that there wasn't any company before, and we've sort of incubated it, and we like to do that close to where we are, so mostly in the Netherlands. So I think that reflects, I think, part of the increase of deals that we see, but also pharma spinouts. The other thing to consider is that Europe has a competitive advantage compared to the US, in that running a biotech company in Europe is about 50 to 60% cheaper compared to the US, and also the pre-money valuations are lower. And when it comes to the Asian opportunity set that I mentioned before, I think given the current geopolitical environment, Europe also has an advantage incubating the Asian assets for the use in the rest of the world in Europe as opposed to the US. So those are some factors that I can identify that may have led to an increase of quality deal flow that we've seen.
Sure. And I think we'll come back to that Asian that you mentioned, that Asian opportunity set later in the conversation. But when you mentioned the company creation, that's being done in partnership with BGV, is that right? So maybe can we just talk a little bit about that joint venture that you guys have there?
Yeah, so indeed, it's a joint venture that we have on the early stage, on the seed and Series A side, with a different manager who are in-house here at Forbion, called BGV. They do mostly company creation from academia in Northwestern Europe. So we sometimes build companies together with BGV. Sometimes our ventures and/or growth funds invest subsequent to BGV having matured a company to a level where they raise their first big internationally syndicated round. But we also do company building in Forbion Ventures, and then how this is differentiated from BGV is more to do with the size of the initiative. So if we build a company and we know that in the first year, I don't know, 50 million is needed to get it off the ground, just to throw out a number, then it's not for BGV, because they would typically invest around 15 million over the life of an investment. But if it's a smaller academic initiative that with a few million you can get off the ground, then it would be typically more on the plate of BGV. So there's various ways in which we collaborate, but it's definitely been a very fruitful collaboration over the years.
Yeah, yeah. So I wanted to take maybe a bit more of a forward-looking stance here. So when we look forward 5 to 10 years from now, what is your vision for the firm's kind of strategic evolution? Is therapeutics still a core thesis? Maybe we can talk a little bit about kind of where you see the direction of the firm going.
Yes, a great question. So I think we have already expanded a fair bit on the therapeutic side when it comes to private capital. So I think, we can grow it a little bit further, but not by much. So we decided as a partnership that we want to develop a second leg for the future for the firm to stand on. So not just be purely focused on the therapeutics, but to stick to the same core underlying technologies, so biotechnologies and green chemistries, and apply these to a different field, which is what we've coined the bioeconomy. So the field of biotech in agriculture, in food, in environmental solutions, and in new materials. And we raised a fund, first fund last year at the hard cap, a smaller fund compared to the biopharmaceutical fund. So this is a 200 million fund with a dedicated team, again, that has been investing in this space for many years. But we do expect this space to take off in a major way, which is also confirmed by the likes of BCG, McKinsey, that have written reports that they expect in the next 10 years this to be a 2 trillion market opportunity. So further expansion in terms of moving into the growth space in the bioeconomy, or also start to do company building, I think those could be in the cards if the first fund performs as we would expect and hope.
Given that opportunity set, I mean, do you expect to see other big life science VCs follow suit? I mean, I can think of a few that already sort of had maybe what you would call sort of planetary health sort of initiatives ongoing. But I mean, is this something that you think is going to be a bigger trend that we'll see?
I would hope so, because that means that we've been successful. There are some other firms, some of which have been going at this particular space for longer, like Sofinova in France, for instance. Some that have raised the Planetary Health Fund pretty much in tandem with us, like RA Capital. So let's see, but I definitely hope that many will be successful in this space, because I think it's very important. We're currently overutilizing the Earth's finite resources by threefold, I think. So we would deplete the Earth at this rate within a certain number of years. And so any solutions that are more sustainable and that economically are viable, I would support. So the more, the merrier at this stage, I would say.
Sure. Wonderful. Well, great. Well, I think we will take a short break right now, and we will be right back.
Innovators everywhere are seeing speed as the driver of investment, partnering and success, speed to the clinic, speed to early human data, speed to de-risk assets. The question for European biotechs is clear. How do you compete in this arena? Facing new momentum from Asia and an unpredictable landscape in the US, the science in Europe is there. There are more experienced operators. And investor sentiment finally is turning. What's needed now is speed. In its 26th edition, BioEquity Europe travels to Central and Eastern Europe for the first time to explore emerging opportunities in the region and debate how European biotech can accelerate to compete and lead in today's world. Join us in Prague, May 4th to 6th for this destination event for investors and biopharma leaders. Register at bioequityeurope.com. BioEquity Europe, where Europe accelerates to compete.
Welcome back to the BioCentury Show. We are chatting with Sander Slootweg, Managing Director at Forbion. So, Sander, a big topic of discussion now is kind of what we've at least termed the NewCo model of sourcing assets from China or Asia, which you'd already sort of mentioned earlier in our conversation, and sort of building new companies around what are often sort of clinical stage assets. So, can we get in a little more detail, granular detail about sort of how active Forbion has been in Asia?
Yeah, so I think I mentioned the arbitrage that historically we've exploited between the price levels in terms of the pre-money levels and the running cost of companies between Europe and the US. But I think in the last couple of years, we've started to explore the other opportunity that we identified vis-a-vis Asia, which is that there's good quality science and products being developed in Asia by local pharma and biotech firms that pretty much focus just on the local market and have few to no capabilities to extract the rest of world value from their assets themselves, and are looking for reliable partners that can do so. So I think we were involved with one of the first notable initiatives there when we co-founded Aiolos, which in-licensed an asset from Hungary, and subsequently raised a substantial round with the aim to develop this asset in the Western world. However, was quickly identified as an interesting takeover target by GSK, and was then acquired for $1 billion plus. And then we were able, with the same team, to go back and review a long list of other assets that we had identified and find the best ones. And this gave rise to a company called Verdiva, which is focused on metabolic diseases, and where we were also co-founders and essentially worked with the same team. So I think from this, we were seen as a first mover, and we got access to quite attractive deal flow from a range of pharma and biotech companies. So it's not always the case that these are incorporated in NewCos. We've also seen some existing portfolio companies that have added a clinical stage asset from one of these partnering deals. But all in all, you're right that there has been an attractive group of late stage assets emerging from not just China. We also historically have done similar spin out deals from Japan with Mitsubishi Tanabe that gave rise to initially the Zima Pharma, later New Amsterdam Pharma. Also another company in our current portfolio, Kinexis, was spun out of Mitsubishi Tanabe. We've spun out assets from Korea. So it's more an Asian opportunity than a pure Chinese opportunity. But yes, we've been quite actively exploiting that. But I do think that in terms of the availability of high quality late stage assets, that it's now a smaller pool, and that the sort of low hanging fruit is already partnered, and therefore we're turning our attention a little bit more to earlier stage assets right now.
Okay. And, just to get into some of the detail here, I mean, how did you go about sort of building this, finding these opportunities? Did you stand up, a team sort of de novo in Asia specifically to hunt for these assets, or did you already have an existing network of academics or companies relationships that you could kind of lean on? Like, can you just walk me through how you source these? I think sometimes it feels like a bit of a black box as to how VCs
we like
or
to keep it
companies
that
find
way,
these.
of course, Steve. We like to keep it now.
Just open the lid just a little bit, maybe a little bit.
All jokes aside, it's a combination as always. But in all honesty, we do not have our own people on the ground. We do have a network, a proven network of local, I would say, advisors that know to identify the right assets. Also, our management teams are well networked in the area. One of our operating partners has spent a lot of time identifying and screening assets, and also our team members frequently travel to China for China Bio and for pharma and biotech meetings. And the other thing is, of course, we're working in a syndicated market. So we've also done some of these deals in tandem with some of the leading US firms, some of which actually have made the move and set up small teams there. So we've worked with RA, OrbiMed, Bain, GA for some of these larger syndicated deals. So I think it's a combination of all these sourcing capabilities.
Right. So, more broadly, obviously, this NewCo model that we've observed over the last couple of years. I mean, do you view this as a trend, maybe as a fad that will only be temporary, or do you see this being more of a long-term sort of theme that will become a long-lasting kind of competitor to US or European innovation?
Yes, I would say This is the late stage assets that in the beginning one could acquire at relatively attractive terms. I think that opportunity is gone. So I think most of the attractive late stage assets have found a partner, and that's why I said that our attention is now turning more to slightly
Right.
earlier assets. But China as a force in biotech is not going to go away. So I think they have two angles as far as I'm concerned. I think they can come up, with high quality molecules of different modalities in a short period of time at very competitive cost. So they've to some extent sort of commoditized finding great molecules against known or validated biology. And I think also the opportunity to do, I would say, quick and dirty clinical testing, so quick clinical proof of concept type of testing. I think that's also how they're set up very well to do that.
Right.
And so that also means that if you look at the competitiveness of us in Europe and in the US, of course, we can also develop great molecules and will be maybe slightly slower, slightly more expensive. But I think our greatest strength is in elucidating novel biology and really coming up with the new sort of targets for exciting approaches, and then of course having to develop molecules against these targets, and there we can collaborate with Chinese partners to come up with these molecules, and we can still do the early clinical testing, for instance, in China. But I think this is where our strength is, plus the later stage trials that require a lot of thinking and key opinion leader input. I think they still do not have that many key opinion leaders in certain areas in China. So I think the late stage trials, the KOL networks and input and elucidating novel biology, that's what we should really focus on. So again, to how many industries have evolved, I think it's still a global industry. All these drugs are essentially developed for patients across the globe, and everyone should play to their strength. And I think this is how things will shape up. The only thing, of course, that's not helping to really benefit from the global strength is impediments like things like tariffs, for instance. But I think we've pretty much now seen what the final extent of that is, and I think it's all still manageable. So I'm pretty optimistic about the way we can all work together to develop great drugs for mankind.
Yeah, thanks, Sander. So, I think that's a really good transition into an initiative that you were a founding member of and launched earlier this year, the European Life Sciences Coalition. So for those who don't know, and, you really should have read my story about it if you didn't know about it, but maybe for those who, who weren't aware of this coalition, can you just walk us through what the coalition is and why you launched it now?
Absolutely. So we've observed that in Europe, although we see great science and we've been able to build great companies, that in terms of the absolute magnitude of the ecosystem, we're still lagging behind the US, and also China's coming up quickly. And one of the major structural impediments is the overall availability of capital to the VC ecosystem, and therefore indirectly to companies, and that the capital has been concentrating with fewer players like ourselves. So in that sense, we do not have an issue in raising our funds, but especially the smaller VCs that are sort of the local company builders are generally finding it difficult to attract investment, and therefore we started this initiative to bolster the strength of the overall ecosystem with a focus on facilitating more capital inflows into the sector from both public sources, so like EIB, EIF, European Commission, but also especially from private capital that in Europe, unfortunately, is still to a large extent on the sidelines. And then I'm talking like pension funds, insurance companies. One very telling statistic, for instance, is that in Europe, if you look at venture capital as a whole, so that includes life sciences, pension funds have invested 0.02% of their balance sheet in venture capital, whereas
That's not much.
US pension funds they have about 2% on average of their balance sheets in venture capital. So that's a factor of 100 difference. And so if we can just reduce that 100 factor to 10, then I think we're already in a very good place. So the main aim of the European Life Sciences Coalition, that besides Forbion also has as members, for instance, Sofinnova, HealthCap, Novo, Andera, but also institutions like Flanders Institute of Biotechnology. And so we have quite a number of members that all support this same case. And we work very closely with the Private Capital Industry Association in Europe called Invest Europe, because they also already cater to the needs of their venture capital members. And so it's a concerted effort to attract more capital to the life sciences sector.
Yeah. So, I mean, on sort of the capital side of the equation, can you highlight where you think sort of the biggest unmet need is in terms of where Europe, when it comes to funding life science companies, where we really need help sort of with that capital concentration?
Well, I would say if you look at the late stage deals, I think those are accessible to our global funds, usually led by a European fund, and then some of the leading US funds will weigh in. I think when it comes to more mid-sized or smaller venture deals, local venture deals, I think this is where most of the need is to have more capital for local country specific company builders.
Right.
And one of the issues is why the pension fund money is still on the sidelines is that they're usually very big pension funds in Europe, and they need to deploy a lot of capital per venture fund. And in most cases, it's too much capital to stomach for a small venture fund. So that's why they are not getting any institutional capital and are dependent on money coming from governmental sources and or family offices typically.
Right. Yeah. So that's why there's some thought about, whether you can sort of establish some sort of broader kind of fund of fund instrument or something like that, where they could deploy a large check, but then those large checks would then be sort of more appropriately allocated out to smaller funds where, the size kind of works. Is that kind of
Yeah, that would be
one of the
typically
thoughts?
the solution. Fund of fund is a very typical solution, but fund of fund managers, they also charge fees. And then if you add their fees to the fees of the underlying venture fund, then typically institutional investors find the fee stack to be too high. And so that's another problem, that they're very cost conscious and are less looking at the higher upside and more at the immediate cost. So yeah, we need to find solutions, and a very low cost fund of fund solution could definitely be part of the overall solution to this conundrum.
Right. Now, we already sort of touched on this. You mentioned it, when we were talking about Asia and China in particular. But, one of the other issues here, obviously, is, that is one of the big draws in China, is being able to do these clinical trials quickly and get that early clinical data for an asset as fast as you can. Does Europe have the ability to catch up in this area? I mean, I think this is also one of the aims of the coalition, right? Is to see what can be done in terms of trying to speed up and make Europe more competitive from this standpoint. So, what can happen here? Is this a feasible sort of goal?
Yes, I think this is also very high on the agenda of Commissioner Varela, the Health Commissioner of the European Commission. We had during the launch of the European Life Science Coalition, we also had a roundtable with him present, and he made it very clear that reducing the approval timelines for clinical studies in Europe and harmonizing things more between countries, that is a major objective, because this is where Europe is now losing out. If you look at the percentage of global clinical trials that have been run in Europe versus US and China, we're definitely losing there. Whereas it's super important to be part of this clinical trial ecosystem because, well, first and foremost, it helps to maintain the level of relevance of your key opinion leaders if they're involved with the major trials. But also once a major trial is run in a certain country, that typically also means that the drug will be launched there and sales will happen and patients will be helped. So definitely a major aim of the European Commission and also, of course, of the coalition, although the main focus again is on sources of capital, but anything to do with
Right.
competitiveness, of course, is close to our hearts.
Yeah. No, and it's nice to hear that there's sort of the requisite sort of recognition from policymakers that this is an important sort of competitive issue. And maybe a sort of shameless plug, this is also going to be one of the prime topics of at our bioequity conference next month in Prague. And so we'll be spending a lot of time talking about Europe and its competitiveness in terms of trials and speed.
Important topic, absolutely.
Yeah. I did want to touch on one of the other maybe longer term goals that was mentioned by the initiative, which was around the idea of having a sort of more vibrant European capital markets for biotech. You and I have been around, quite a long time, and this has been a conversation, that predates us both, I think, or this idea of having a sort of a European version of NASDAQ, essentially. So, walk me through why you think this argument, or why kind of restart this discussion again, whereas I think we'd kind of reached the point to where people had kind of accepted the fact that European companies can just go to NASDAQ and raise money. So why kind of restart this discussion now, and why do you think Europe needs a vibrant sort of capital market on its own?
Excellent question. And indeed, attempts have been made in the past. We've seen the Neuer mark being promoted as Europeans, NASDAQ, AIM in London. We've seen EastEC. We've seen various initiatives, but they're all in the end they were lacking critical mass to be close to what NASDAQ has meant for the tech sector in the US and indirectly also for the rest of the world. So why is it important? I think it's important because you also have to consider what happens when a company is developing well and needs in life sciences. The more successful you are, as long as you're still development stage, the more capital you need. So at some point, maybe you cannot satisfy your capital needs with raising private rounds, and you're looking for a listing, especially if you want to go all the way and take your drugs to market. Then it would be nice if you could raise money in Europe on the market, because then once you start selling your drugs, then of course pension funds and other investors in the public markets would be the beneficiaries of the market cap increase. European tax authorities would collect some of the tax revenues related to that. But whereas if you list on NASDAQ, what we typically see is initially the CFO moves to the US, then they run the global registrational studies in the US, so the CMO and the clinical team goes there, and then the BD goes there. In the end, most companies de facto become US companies, and some actually reincorporate and become full sort of US companies. So a lot of the economic value that transpires when companies are successful then lands in the US. And I think in Europe, we're increasingly conscious of that fact that we have great science and we have great talent and we have increasing pools of capital. But in order to fully benefit from the economical value created, you need to keep the companies in Europe. Now, as an investor, I'm indifferent because I can indeed take my companies to NASDAQ. We can invest in NASDAQ companies. We invest in the US. But as a European citizen, I think we're losing out on a great opportunity to build a thriving sector in Europe, and having a public market, a functioning public market, is very important. And the other element, which I would mention that is very important, is to have a attractive home market. So a reimbursement level in Europe that allows companies to generate profits on all the investment that goes into this exciting innovation. So having a thriving European market and a public market for companies to raise money are both very important to create a lasting, thriving, economical sector in Europe.
Right. Yeah, and that's I think the challenging part is that you sort of need to have that very attractive commercial opportunity to maybe help stand up a capital markets. And so maybe a bit of a chicken and egg situation that will take some time to sort out. But you're right; those are two major major things that would definitely benefit sort of Europe sort of going forward. So, finally, I just wanted to come back to, as I mentioned, our BioEquity Europe conference is going to be in Prague in a few weeks' time. So I wanted to maybe, while I have you, get your perspective on, biotech opportunities in Central and Eastern Europe. What do you see as the strengths of that region in terms of what the offering is now, and maybe how they could help build out their own biotech hubs for the future?
Yeah, that's a good question, and we'll definitely also be in Prague. So looking forward to the discussions also on the competitiveness. Yeah, so I think we already for many years have seen very high quality people that have been trained in Eastern Europe at the universities populate the workforce at various of our European companies. And increasingly, we're also seeing deal flow from countries like Poland, like Lithuania, like Czech Republic. And I think, there's nothing wrong with the quality. There just are not that many companies of some size and significance. So I think there's a lot of early activity where also governmental funds and European funds are combined with some local VC funds. And hopefully at some point these companies will mature and will be fully sort of part of our deal flow, for instance, our ventures and growth fund. But they're definitely getting there. I think it's just a part of Europe that is, again, lagging maybe a little bit behind in time vis-a-vis the rest of Europe. Of course, historically, Central Eastern Europe was focused more on generics, clinical trials, some diagnostic activity, some manufacturing. But now you're starting to see the more typical biotechs emerging. So I have high hopes. And also because, again, compared to Western Europe, I would expect the cost of operations to be more competitive again. If you, for instance, compare to outsourcing to Asia, I think Central and Eastern Europe also has a lot to offer. And so, I think we will see much more from that region.
Yeah, wonderful, great. Well, I believe that's all we have time for today, but a huge thank you to Sander for joining us, and thanks to our listeners for tuning in to the BioCentury Show. We'll see you all
Thanks
again.
for having
Thank
me.
you.
Thanks.
Brought to you by the 26th BioEquity Europe, scheduled for May 2025 in Prague. Join BioCentury, EBD Group, and regional hosts BioCB and Prague Bio at Biotech's premier CEO and investor conference, and debate what comes next for European biotech.